A little under a month ago, the popular cryptocurrency company Coinbase went ahead and listed its shares on the public markets. Ever since then, the stock has been absolutely decimated, reaching levels of negative 40% from its all-time highs. In this video, I want to take you guys through three main reasons as to why the Coinbase listing was a failure. If you find this video insightful, please consider subscribing. It's free to do, and you can always change your mind later. Let's get into it. Reason number one. Coinbase did something different from a majority of companies out there. When you think about a company potentially going public on an exchange, they generally do it through an IPO, an initial public offering. This allows the company to list their shares publicly on an exchange while also raising a certain amount of money at the same time. That can range anywhere from a couple $100 million, potentially to billions of dollars. Now, a majority of companies go through IPOs. Now, when we look at a direct listing, which is the route that Coinbase chose to take, essentially a direct listing allows you to go public without raising any capital. So it essentially allows you to take the current shares outstanding and simply place them onto a trading exchange to allow potentially insiders and current people who hold the stock to sell out and different retail or institutional investors to buy those shares. Now, the thing about a direct listing compared to an IPO is that when you have an IPO, generally speaking, insiders, people who work at the company, can't sell their shares for a certain amount of time. Whether that be a couple of months, potentially upwards of a year, they're forced to hold their stock. Now, when we look at a direct listing, that requirement is not there. So with Coinbase, insiders were able to sell their shares immediately as the stock went public. So when we look at the run that Coinbase had immediately when opening up, that was everyone buying in. But what we saw right after was potentially insiders going out and selling their shares. And I'm going to show you guys a very interesting picture. I'm going to hide my face here so that you get a better look. Essentially, we see a majority, or not a majority, but a lot of insiders going out and selling their shares of Coinbase pretty much the day of going public at upwards of the high $300 range. And we see a lot of high up there people who work at Coinbase selling out of their shares. Look at this. The CFO sold 100% of their shares, nearly $100 million. You have different potentially institutions and different insiders selling billions of dollars of shares, potentially their entire positions. Now, from my understanding, all insiders as a whole sold roughly $5 billion in stock the day Coinbase went public, which shows that one of the main reasons as to Coinbase did go public in the first place is for insiders to sell their shares. If it wasn't for that, they probably would have remained private. Now, although this isn't the best thing in the world for a company like Coinbase, it does offer a potential buying opportunity. And I want to take you guys through different companies that chose to go through the direct listing route. And, when we look at this whole situation with, insider selling, it doesn't necessarily mean that the company is bad. In fact, these people could just be selling their shares to potentially diversify into other assets, or they just need the money. When we look at a company like Slack Technologies, this is a tech company that works in the essentially the communication space. Slack, they went through a direct listing where management and insiders could sell their shares immediately after going public. So what did we see? We saw an immediate pop to right around $40 per share back in kind of mid-2019. And in the months to follow, we saw Slack cut its share price pretty much in half. Now, what happened after that? We saw the price rise again as fundamentals improved at the company before getting acquired by, I believe this was, I think it's Salesforce that acquired Slack. But what we saw in this situation was, again, that initial pop, we saw insiders sell, causing the share price to decline. And that is what we're seeing with Coinbase, potentially another company like Spotify. We all know Spotify. They went through a direct listing. Now, they actually drifted higher for at least a month or two. But then again, we saw that same decline that we saw with both Slack and now Coinbase. So this trend that we're seeing with Coinbase is potentially a repeat of what we're seeing across all of these different direct listings. And if those tell us anything, this is a good and potentially great buying opportunity if you believe in Coinbase over the long run. Now, the next thing that I want to focus on is bad timing. Coinbase couldn't have gone public at a worse time. The timing in the markets, the sentiment around cryptocurrencies, and cryptocurrency prices as a whole caused sentiment around Coinbase to be much lower than it could have if they potentially IPO'd back in January or late in 2020. First thing I want to focus on. When Coinbase IPO'd, I want to take you guys through the exact date that they went public. April 14th. You'll see a big trend in the companies that we're about to look at. First, what we saw over the past month potentially is a big rotation out of high growth, high multiple retail-owned names into big tech names. I'm going to show you guys a company, potentially Etsy, and this is repeated throughout a lot of companies out there. They topped right around April 14th at right around $220 per share. Following April 14th, which is the same date that Coinbase went public, their share price declined substantially and is now trading at $165. So in my opinion, Coinbase just got caught up in a lot of this negativity that we saw pertaining to these high growth, high multiple technology names. Now what we also saw was a decline in sentiment around cryptocurrency companies. Keep in mind, April 14th is when they went public. Look at this. Big G Digital Assets, a company competing in the cryptocurrency space, their stock topped right around 13th to 14th of April before declining right around 60%. So when you look at this comparison between potentially Big G here and Coinbase, Coinbase went public at the top or peak sentiment of cryptocurrencies. You know, when you look at a company like Voyager Digital, this one actually, it kind of topped a little bit earlier on the 5th, but you'll see that this essentially really reiterates the fact that the sentiment around cryptocurrency institutions and companies declined substantially throughout the month of April, which is exactly when Coinbase went public. Now, the next thing, and last thing in this section here that I want to cover is the fact that we saw cryptocurrency companies, or rather cryptocurrency prices, top at the same time that Coinbase went public. Look at this timing, guys. On April 14th, Bitcoin, the face of the cryptocurrency industry, hit a high of roughly $64,500. Before, over the next couple of weeks, declining to a price of $47,000, nearly a $20,000 drop. Now, what we have to understand with Coinbase is that they actually benefit from volatility. But Wall Street doesn't really understand that yet, and they really consider a drop in cryptocurrency prices parallel with a decline in the business that a company like Coinbase gets. So although they really did benefit from that drop due to an increase in trading on the platform, that may be one of the reasons why that sentiment in cryptocurrencies changed, and maybe one of the reasons as to why Coinbase stock dropped so substantially from April 14th, the exact date that the market and market for high growth, high value tech names topped, the same day that the sentiment around cryptocurrencies topped, and the same day that Bitcoin as a whole topped. A very interesting correlation. The third thing, and the last thing that I want to cover as to exactly why Coinbase as a company dropped so substantially over the past month is the fact that Coinbase is a difficult company to value. And I want to make this very clear to you guys. Coinbase has experienced one of the best years in the company's history over the past year due to the increased trading in cryptocurrencies as a whole. If we look at their Q1 results here, we see a substantial number of $1.8 billion in revenue and $730 to $800 million in net income, EBITDA of $1.1 billion. Huge. Now, when we look at a company like Coinbase, it's very difficult to value it, as we can't just look at their Q1 report and repeat it, times it by 4, and say, all right, that's their 2021 report rather. Why? Because trading volume peaked in January, February, and March. That was when we had essentially peak euphoria around the cryptocurrency system. So although Coinbase as a company is most likely going to do very, very well throughout the remainder of 2021, we might not see the same levels that we saw back in January, February, and March, potentially causing a decline in revenue. Now, when we also look at Coinbase, it's also very difficult to kind of point to a potential revenue place for them to be at by the end of the year. When we look at generally companies, generally speaking, a lot of them have reoccurring revenue models where, it's very easy and, rather predictable to predict what revenue will be like on a yearly basis based on a few factors. Now, with the thing like Coinbase, it's very difficult to project exactly what trading volume will be for any given month. And although, it is a phenomenal company that will continue to grow going forwards, This difficulty of really valuing it on a high level is potentially one of the things that caused investors to misprice it at the beginning of trading. Now, I want to give you guys my overall opinions on Coinbase stock. Personally, I believe that Coinbase is one of the faces of the cryptocurrency market. If you want to buy Bitcoin, Ethereum, or any other cryptocurrencies as a regular day person, you are most likely going to go to Coinbase. Let me repeat that. Coinbase is one of the most attractive places to buy a cryptocurrency from a regular day person's point of view. It's simple and it's easy to use. Because of that, and because of that branding, they'll most likely remain at the top of the cryptocurrency market for years to come. So that being said, as the company continues to innovate, they will most likely do very, very well. But one very important thing to understand is the fact that a majority of their revenue is coming from fee-related products. But revenue from their actual products like Coinbase Pro or other cryptocurrency services is increasing at a very, very fast pace. So in my opinion, as time goes on, although revenue from potentially fee-related business will decline, I think revenue from service-related products will increase substantially. So although I don't have a video on Coinbase, and although I don't own any shares at this moment in time, I actually own another cryptocurrency exchange called Voyager Digital, which is publicly traded and has a bit of a different business model than Coinbase, although it does offer some similar products. The thing about Coinbase that we really need to understand is that their revenue may switch over the coming years. And if you want me to take a deeper dive into Coinbase and make a full analysis video on it, please let me know down in the comment section below and by hitting that like button. So anyways, guys, thank you so much for watching. I really appreciate you being here. If you found any value, make sure to subscribe and see you guys next time.